Hi everyone, Gianni DePoce here with you for TheoTrade. Today is Tuesday, the 4th of March, 2025, and we are still seeing some selling pressures in stocks, even though today we are up off the lows. And I discussed this in the live session today, how this would be a logical area for the market to bounce, given we just bounced off technical support. And as a matter of fact, I had a pretty in-depth conversation today on how we use support and resistance zones in markets to look for bounces. And lo and behold, we are getting that bounce here in the S&P 500. You're actually seeing the NASDAQ lead on this rally. It is now positive on the day. It also bounced off technical support. That being said, there are some trend issues in both the NASDAQ and the S&P. Namely, we took out that low from January 13th, and in both of those indices, both in the S&P and in the NASDAQ, we have pretty much erased all of the post-election gains. Now, we know that fear levels are very high, a lot of concerns surrounding the tariff tantrums in the market, but there are some decent things happening underneath the surface. I commented yesterday in my free sector bullseye newsletter how financials were the top performing sector in the market last week. They're getting hammered today, but they did hit a new all-time high yesterday. That is not something that I would look for if the market was about to roll over. If you look at some of the defensive sectors of the market, like consumer staples, they are seeing some selling today. You take a look at tech. Tech is up. It's been a while since we compared the price action of semiconductors to the NASDAQ, but chip names are doing very well here as well. So to me, it kind of seems like there's some shifting going on underneath the surface of the market. And it's almost as if one of those situations is playing out now where the indices masked the market's internal weakness over the past couple of months, but now we could be seeing some improvements, mainly at an intermarket level. What does intermarket mean? Well, it simply means using other markets to make and to reach conclusions about others. And I'm specifically referencing the dollar in this case. The dollar continues to sell off by and large against the Japanese yen. A little bit of a rally here, but the bigger move in the dollar is happening against the euro. And so I have a tough time being completely bearish on this market with the euro rallying like it is. Now, to be clear, this tells us that the stock market in the US is going up simply as a result of currency devaluation. That's a big difference. So it's not really a situation where all the money in the world is rushing into US markets right now. And that's not unsurprising given the whole situation going on with tariffs at the moment. But where are we seeing some tremendous strength at a country level? It continues to be in China. This is a theme that I've been talking about for a few weeks now. And even with a lot of my domestic stock plays having been, I've been having some stop losses triggered domestically on the names that I've been trading in the US, my Chinese names have been holding up exceptionally well. And I've especially liked what's been happening in the Chinese internet sector. So you even have names like Alibaba now positive on the day. It looks like you just retested that former resistance turn support zone and completed a higher low. We've shared some ideas on Tencent recently here in the TheoTrade chat. That's up over 4.5% almost on the day, looking very strong. But, I've been telling members here at TheoTrade to pay close attention to the terrific 10. You have names like Baidu, still very strong, JD shaping up. Meituan looking good here. And I even like NetEase. NetEase up over 4.5% on the day, looking very strong. So these are the themes that are working. And it seems to be even somewhat tech related internationally. So I think we would be rewarded in this weakening dollar environment to go abroad, look for opportunities in international names. There's still a lot of skepticism. When I share that idea, I say, hey guys, I think the best opportunity is in China. And a lot of times I'm met with a lot of pushback. Oh, I don't like the Chinese market. I don't think we should be investing there. The stimulus doesn't work. That's fine. That's music to my ears. Now you compare this to some of the US Magnificent Seven names, and they don't all look terrible. In fact, I was entertaining putting on a swing long position in Tesla today. I did talk myself out of it. You did bounce off technical support there. But Meta finally seeing some selling, Amazon bouncing off support here. But I think the strongest name in the Mag 7 right now. It's technically not even in the Mag 7, is Netflix. Netflix is actually looking pretty good here. Microsoft still dealing with some issues at a technical level. And Nvidia, let's talk about Nvidia because we commented on chips here too. We are bouncing off this technical support. So is this a logical area for the decline to stop for a few days? I think so. I think so. Does that mean we're in the all clear? No, absolutely not. And that's what I mean when it comes to the trend. The S&P did hit a new all-time high back in February, but we did take out this low of significance from January. So again, I'm not fully bearish. I'm a bit cautious. I do have some longs on. The longs that are working the most are Chinese names. And that's not all that I'm looking at right now. I like especially what's happening in precious metals. I think a weakening dollar is bullish for gold. It should be bullish for silver as well. And some of the precious metal names that we've been trading here have been holding up especially well. Names like Alamos Gold, okay, Agnico Eagle Mines, looking pretty good. And over in the Trinity trade, Kinross Gold up almost 4% on the day. So there are things working, but you have to be highly, highly selective in this environment. And that's tough for a lot of people, given how the Mag 7 did so well last year. But let's jump over to bonds because I think on that subject of support and resistance, which was the theme of the day, I do want to stick with that. You are seeing some selling here in bonds. Now we did touch the first target that I wanted to see in the 10-year note. I wanted to see us take out this high from December 6th, and we did so. So we have a higher high here in bonds. I think interest rates are coming down. I think the Trump administration has been very vocal about that. Their policies are geared to almost slowing the economy, forcing the Fed to lower rates. And now you have the May rate cut, a 50-50 toss-up. We might cut rates in May now. The Fed might cut rates in May. Before you were looking at June or July. So the rate cut odds have moved up, but the rally in bonds has kind of opened up the door for the Fed. I don't think inflation is the risk anymore. Crude oil, very comfortable between the resistance zone at 76 to 78 and the support zone at 65, 68. This is the sweet spot for crude oil. So inflation isn't the threat. I think unemployment is. Unemployment is what we need to watch to rise. And we know that with the government cuts happening now, there are jobs being lost at the federal level, and that could lead to an uptick in unemployment, which could slow the economy and could lead to a rebound in bond prices, meaning lower interest rates. So let's jump over to crypto right now. You did just see Bitcoin turn positive. We had the news that the Strategic Crypto Reserve launched over the weekend, and you had a rip higher in crypto, and then it dropped hard. But even Ethereum is now up after taking out last week's low. Bitcoin did not take out last week's low, so this could be an interesting move here. And you're starting to see this rally accelerate pretty notably here in the short term. So I'm going to be looking at some names like MicroStrategy and Coinbase here in the coming days as they stage nice rebounds. But all in all, I think it's a stock picker's environment. There's been a lot of carnage underneath the surface, a lot of bearish sentiment. The dollar's selling off hard. And I think we're ripe for a corrective rally now. Whether or not we reestablish a new bull trend remains to be seen, but I wouldn't be fully in the bearish camp now. It's too late to panic. That ship has sailed. Worst case scenario, if we do break this technical support zone in the S&P, you could see a drop to 5250, 5300, but I'm not ready to make that my outright position as long as we're holding above this support zone here that I highlighted. So that's all I got for today, guys. Thank you so much for watching. Hope to see you in the TheoTrade chat room, and I'll catch you next week. Thanks.